As shoppers were spending, of course, billions of dollars on Cyber Monday, U.S. stocks actually rebounded yesterday, and that rally helped the Dow and the S&P cut their losses for the year. But was yesterday's spike just a one-day affair? Let's bring in Mark Avallone. He's the president and founder of Potomac Wealth Advisors. That's the question. Was this really just kind of a one-off yesterday, Mark? Was it a relief rally, whatever you want to call it, a snapback?
Well, I think it's a continuation of what we're going to see, what we have seen, which is volatility. Volatility goes both ways. It surprises on the upside and shocks on the downside. I don't see a clear picture here. We have two huge cross currents. On the one hand, we have some of the news that we just heard about, this super strong consumer, great wage increases, low unemployment, and strong corporate profits. But on the other hand, we have the specter of a hawkish Fed and an uncertain global outlook between slowing overseas growth and tariff and trade talk. When you mix those two, you do get uncertainty. So what we're looking for is a little more clarity. And if we get it from either the Fed or from the China trade talks, I think the market can move higher. But we need a catalyst at this point to give us that clarity.
Well, what are you expecting? I mean, you're looking at the same reports we are. There have been some reports out of China, Chinese state media, that there actually had been conversations between the two leaders, and maybe that was going to lead to some framework or agreement. If nothing else, at the G20, maybe the two countries decide to open up formal talks. But we did have the lead negotiator for China actually not come to the U.S., and he went ahead and went to Germany. Does that worry you about where we're going with all this?
Well, there's a lot of posturing, a lot of bravado, and a lot of puffery. They're positioning themselves for a deal that they can both take home. Chinese don't want to lose face, and Trump wants to satisfy his voters, the forgotten middle class in the middle of the country.
Even though it looks like China's economy is slowing, and there are some of the administration that have said openly they believe that China's GDP is going to take a 1.5% hit based on these tariffs. They're not blinking, Mark.
But what do they care about in the short run? They don't have an election cycle. They're thinking long term. They have a vision that goes out decades for Chinese dominance. And they're not going to change that because our president, who has 2 years left in office, is taking them head on. We need to find something in the middle. We need to be diplomatic about it because a public beatdown of China is not going to happen.
Yeah, you know, also, too, the president gave this interview to the Wall Street Journal, and in it he talked about, he was very clear. He said, we've only used a small portion of what we have to use because I have another $267 billion to go if I want. That's everything. And remember, let's just remind our viewers that 80% of consumer goods are made in China. That shirt you're wearing, possibly, I don't know, but, you know, most of the things that we're actually wearing on our bodies, the purses we're carrying, the shoes we're wearing, all of that's from China. That's going to be a tax on the U.S. consumer.
Yes, and there are other tactics China has other than tariffs. We have to keep that in mind. It's not like they're going to say, we don't have any more things to put tariffs on, so we give up. They can slow down corporate mergers, U.S. corporate development there. Look at the impact on overseas economy, why emerging markets are down. This has a ripple effect. It's not just for the U.S., and we really want to see some clarity coming out of these talks.
Well, Mark, you do strike me as an Italian suit kind of guy. I want to throw that out there before we leave. Mark, thank you very much for being here. It's good to have you, sir.
Okay, thank you.